$500 trillion. Market cap, Bitcoin. Sell everything. Go into Bitcoin because Saylor said $500 trillion market cap. I mean, technically, what do you need to achieve that? You're not going to be selling Bitcoin to buy Bitcoin. No. You certainly wouldn't sell your XRP to buy Bitcoin. Don't even know why I'm saying profanities in this live stream. Please forgive me if that was explicit for you and there's children around. I'm sorry that I mentioned that asset. Actually, I've got to mention that asset tonight because we've got some good news with XRP. ETF. Yeah, man. Park that aside, ladies and gentlemen. Tonight's video, I'm going to be diving into what we can expect as we head into the CPI reading. More importantly, at the open tomorrow, we'll be getting the earnings announcements from the big banks, JP Morgan, Wells Fargo, followed by the next day with Bank of America. But these next 24 hours are going to be the make or break for this rally to the upside. It could be an opportunity for you to buy Bitcoin on a discount, or is the market top in for cryptocurrency? Because the CPI reading is going to dictate what path the Federal Reserve is going to take in terms of the interest rates. So if you are new, ladies and gentlemen, welcome to Traders Reality. My name is Tino. Let's have a conversation. For God's sake, man, I always get this shit mixed. So we get it started off with this story here. Stocks rise as Trump says he's open to trade talks. Surprise, mother. Anyways, listen. Trump has this thing. He gives out a tariff, pulls back and says, no, don't worry. Let's have a conversation, man. This is the art of the deal. It's getting very predictable. The market itself accepted that and it started to trail up higher today. Some quite choppy price action to say the least, but investors are effectively preparing themselves for tomorrow's data. So you've got on the calendar with the CPI data coming out tomorrow, 1:30 p.m. UK time, 8:30 a.m. Eastern Standard. Projections are for an increase on inflation, which is a little bit of a problem, ladies and gentlemen. Remember, as I said earlier on, banks are expecting the reading to be hot. Now, if it is hot, this is what's going to happen. Going over, Bitcoin, look how wonderful that is, man. The 2-year yield is currently trading flat, 3.89%, but it is up 0.13% for the day. 10-year is coming in at 0.23% positive, and it's trading at the 4.42%. The 5-year itself just flat, near enough negative at 0.08%, and the 30-year is up nearly 0.3% for the day. This is the problem, ladies and gentlemen. When the yields are trading higher, it does have a little bit of an impact on the stock market, especially the tech market, because they are subject to changes in the yield, or should I say, in the interest rates. Now, as long as the yields keep on climbing up, then that means the expectation from investors is that interest rates are probably going to stay higher for longer, which means investors are going to be demanding more of a rate of return to hold on to US debt, which is why you're seeing the bonds market still going down. So why aren't they buying the bonds? Well, it's because your US deficit's going up. And with your US deficit going high, investors are naturally going to be demanding more of a rate of return for holding on to US debt. But what's going to get investors a bit optimistic about things? Tomorrow, JP Morgan, they're going to be declaring their earnings, and their year-over-year earnings says that it's increase in the earnings on lower revenues. Why is this really important? Because it means that the financial products that they are providing could be reflective of high interest rates, which means that whoever's purchased a product from JP Morgan, whether it's a loan, they're paying more interest, which is why Donald Trump is banging on about cutting the rates, because it is starting to squeeze people, businesses across the board. Now, with that being said, going over into JP Morgan statistics, in front of you is JP Morgan Chase's price. You've got $288.55 per share. But what I want to draw your attention to is the quarterly earnings. Bottom of the screen, you can see that each quarter shows you the earnings and the sales. We had 3% on earnings and 22% on the sales, and that was in June 24. The next quarter, September 30th, you got minus 4% and then plus 7% on the earnings and sales. And then December 31st, you've got plus 21% on the earnings and 11% on the sales. And then going into the March quarter of 2025, you got plus 6 and plus 8 on earnings and sales. What do we need to see? We need to see a positive earnings and positive sales, but more than what the previous quarter was. That would then start the acceleration. because you need to have 3/4 of acceleration in earnings and sales to suggest the idea that the company is doing things, or there's progression, there's expansion, there's adoption, there's a new product, and it shows interest from investors. Now, when we go into the actual information on JP Morgan, you can see here that there is a bit of a reduction on the number of funds holding the asset. It went from March 25 quarter at 5,550. Going into June, it's dropped down to 5,497. Granted, it's still a lot of funds holding this stock, but there is a reduction in exposure from fund managers who are probably dumping the stock. I mean, it's the perfect time to get rid of it because it's trailing very, very significantly at the highs. So here it is. Saylor believing that Bitcoin is going to go to 500 trillion market cap and it's going to demonetize gold. Well, Saylor goes on to argue that money is going to be leaving real estate, says here, real estate leaving Russia and private equity in China. And it's all going to be shifting from the old legacy way of doing business or financial system to the cryptocurrency way of doing business. Now, listen, I've said this before. Institutional investors or hedge fund managers, they have a common practice when it comes to investing. They split their portfolio with 60% in stocks, commodities, real estate, you name it, and then 40% in the bonds. If we were to shave off at least 2 or 3% of that conventional way of investing and add Bitcoin to that pot, then, ladies and gentlemen, 500 trillion will be a walk in the park. Most definitely. Because if they then start adopting Bitcoin as common practice to add it to portfolios, and of course, you know, there's companies out right now adding it to their treasury, then of course, Bitcoin isn't going to go to $500 trillion in market cap. It's just going to keep on going. But the thing about Bitcoin is the scarcity to it. There is a limited supply, and whose hands is it going to end up in? Now, remember, Bitcoin, in my opinion, is a commodity. Equally, Bitcoin is going to be subject to wild price swings before it gets to that stable price point where only big players are holding on to it. And when the big boys are holding on to it, only small movements are going to happen and only a few hands are going to be exchanging Bitcoin. So with all these companies going out there and buying your Bitcoin, I'm telling you, it's a big money heist. With that being said, going over into the Arkham, we haven't really seen any activity just yet on the Arkham. We haven't had nothing other than Wisdom Tree making a little bit of movement. The Coinbase Prime has deposited into Wisdom Tree. So there's nothing really from BlackRock just yet because that's the one that we're all paying attention to. Going over into some other news, Fundstrat Tom Lee. He, of course, has created BitMine, and that is going to be the equivalent of MicroStrategy with Bitcoin. It's going to be the same with Ethereum. Now, he's got a price target of $10,000 with Ethereum. Now, saying that with Ethereum, just quickly going over into the price action of Ethereum. I mean, Ethereum, when are you going to have your day, man? Like, you've just been taking absolutely forever. You've not taken out your all-time high. Where are we at with it? Here we go. I mean, look, still not taking its all-time high. And if it's going to take Ethereum long to get to that point, I mean, are we going into the accumulation phase of Ethereum where it's just going to stay sideways? Bitcoin's going to keep on moving, and then Ethereum will have its day where it absolutely explodes. Remember, you've got the company Sharkpool who have been buying a lot of Ethereum. And of course, remember, 30% of the supply of Ethereum is currently locked in staking. So that's naturally going to be causing Ethereum's price to just continue up in the longer run. But let me bring you some good old flavor for you. Look at this. Can XRP hit $5 amid Ripple ETF optimism? Days. So it says here, ProShares XRP ETF launches July 18th following a federal court ruling clarity. And it says the ISO 222, it goes live July 14th, benefiting RippleNet integration capabilities. So as much as I've been slating XRP, seems like it's good news for it. Quick snapshot of Bitcoin. You can see that they've actually attacked some of the long liquidations, and some shorts are starting to come into play. But all this liquidity right here is most likely probably getting primed for the CPI reading going into tomorrow. Now, something you've got to take into consideration with that. If we go over to Bitcoin's price right now, you can see on the daily time frame, it's doing relatively well. And by the principle of the hybrid system, this candlestick looks like it's forming what is called a stopping volume candle, where price moves in a specific direction, sweeps liquidity, and then pulls back. And because of that activity, it could give us the idea that Bitcoin could be in a position to start topping out. But naturally, we'd be expecting a little bit of a pullback in Bitcoin. Going over into the order flow, you can see that we've got quite a few orders coming into play, which naturally, if the CPI data comes in and it doesn't give the market what it wants, there could be an opportunity to get Bitcoin on a bid. That means retrace and then effectively then see Bitcoin try and climb up in the future. Now, what you got to be mindful of on Bitcoin on the daily time frame is this. If you are a spot trader, what you got to look out for is how Bitcoin behaves at these two moving averages. Given that they are very extended to the upside, the idea is that if they do breach the 5 EMA, that's still okay on the daily time frame. Why? Because it can still sustain the idea of momentum. What do I mean? Well, just look at this. You can see how they broke away from the 5 and 13 EMA right there. Then the next few candles were trading inside of the 5 EMA and within the 13 EMA. And then they ended up making the move to the upside from that. Logic says that that is what we're looking for with Bitcoin if we're going to sustain the idea that volatility is still present and that Bitcoin is still on the trajectory to keep on climbing up towards that 150K mark, which is what we were talking about last week. If you made it this far, mad love and respect, ladies and gentlemen. Hit the like button and subscribe. It's free to do. Alternatively, if you want to spend your money, then become a platinum member where you can get the benefit of trade setups that I provide every single day and much more content on the hybrid system, which is the system we use to trade the financial markets. All of that is in the description of this video. But let me break down tomorrow. CPI data is going to be released at 8:30 a.m. Eastern Standard and 1:30 p.m. UK time. Now, this is what you're looking out for. The expectation is that inflation year on year is going to be 2.6%, higher than the previous reading of 2.4. The core price index is coming in at 0.3%, higher than the previous reading of 0.1%. Now, this is where it gets interesting. If we get those exact figures, then it kind of justifies why Powell is keeping the interest rates at the level that they are. So then Donald Trump will probably keep his mouth shut a little bit. However, if we see the inflation data coming in lower than their expectations, then that will guarantee that Powell's probably going to be out of a job by the end of the week. And he was wrong to keep interest rates high for so long because Donald Trump has been banging on about the idea that inflation is low. However, banks across the board are expecting a hot reading, which means that it could be above 2.6%, maybe 3%. The core price could come in higher at 0.5%. The expectation is that it could come in higher because of tariffs. Now, Fed speakers have already said that they are expecting a little bit of an increase. But if tomorrow does show that inflation has gone up higher, Donald Trump's going to take a step back. And he's probably going to reevaluate this one big beautiful bill because not just tariffs, but tax cuts are also going to include the idea of inflation going up higher. And then Jerome Powell will be the top boy on top saying, I told you we should keep the interest rates higher for longer, but no one listened. With that being said, ladies and gentlemen, please be careful when you're trading tomorrow during the CPI data. It will be volatile. Take some profits and get ready for the next load up on Bitcoin, because I don't think Bitcoin is done just yet. But tomorrow will put things into perspective for us on whether we should start getting involved in Bitcoin at these levels. Mad love and respect, guys. Take care of yourselves, and I'll tune into you all tomorrow. Peace. Too many winks, man.